Hello and welcome to the CNBC-TV18 special. The budget verdict continues and we are in conversation with the budget makers themselves. Joining us now on the program is the Economic Affairs Secretary, Mr. Ajay Seth. Mr. Seth, thanks very much for joining us again on CNBC-TV18 for a much more detailed conversation than we had on budget day itself. I want to understand from you, sir, to take forward what the FM said in her speech as far as the fiscal consolidation roadmap is concerned and the outlook from here on for the government. And I'm quoting from the speech, the fiscal consolidation path announced by me in 2021 has served our economy very well. From 2026-27 onwards, our endeavour will be to keep the fiscal deficit each year such that the central government debt will be on a declining path as a percentage of GDP. While the fiscal consolidation glide path has been mapped out by the FM, what about the debt side, sir? What's the expectation that we should realistically have in terms of the debt levels that the government wishes to achieve within this period as well?
Okay. See, conventionally, debt management for public debt management has been looked at from the perspective of the flow as a parameter. How much governments should borrow in a particular year. But when we look at the sustainability of debt, what is relevant is the stock of the debt, which has a far more lasting impact because one can adjust the annual accretion to the debt stock. But whatever one has accumulated over the years, that has to be brought to the sustainable level. Keeping that in mind, what Finance Minister has announced that government has delivered and is committed to deliver even next year the glide path from 2021 till the next year. What next? As a forward guidance to the market, an approach has been suggested what government intends to follow from the financial year 26-27. Is saying that if you are looking at bringing the total debt stock to a sustainable level, then the primary or the most relevant parameter itself, let's anchor our efforts to that one itself, which is total debt stock to GDP ratio.
Right.
And every year we try to chip it away from there. And if you recall that pre-pandemic country was, or central government debt was around 48%. This ratio was around 48%. Because of the pandemic, it went up to almost...
When at about 56.
It went up to 61.
Yeah.
Now we are 56 plus.
Right.
Meaning that over 4 years, we have come down by about 5 percentage point. Moving forward, every year, it has to be reduced so that we reach to a more sustainable.
So what is that quantum that you realistically believe that you will be able to chip away, in your words, every year?
So the policy intent has been initiated by Finance Minister. Now it is for us now to work out the ways how to operationalize this. We have certain ideas how to put it together, but that call has to be done, that what kind of a glide path has to be done over the course of next 1 year.
So what are the options on the table? You said that the work has, obviously some background work has been done and decisions will have to be taken on the route forward. But what are the options on the table?
So the options in the sense that why this shuttle shift has been thought of, and it's not, this is several economists have been talking about it, the public finance people who have worked in that area have been talking about it, not just in India but even abroad, is that different economies based on their pace of growth and the structure of the economy have the need for governments to play a particular role, as well as have the absorptive capacity to sustain a particular level of debt. Considering that India has been growing in the last 4 years or 3 years at a good pace, and we have the confidence that even in the future, for foreseeable future, we can maintain that at a higher level. We have both the need and the absorptive capacity for a higher debt. But of course, it has to become a more sustainable. At the moment, 56% plus ratio is certainly an elevated level. It has to be brought down. So keeping that in mind...
What would be a comfortable level? You acknowledge the fact that 56 plus is an elevated level. What would be a comfortable level as far as debt is concerned to your mind?
See, we have a long way to go on that particular one. As I mentioned it, the pre-pandemic, the debt level was 48%. So the first goal would be to reach that level. But that has to be over a period of time. It can't be a sudden one. These are the accumulated debt. But what should be, with what period it has to be achieved that level will have to be, that is a work which we have to do. Look it into the conditions of our economy and to do so. What it gives a flexibility that there can be years wherein there may be a need to calibrate how much government has to do in that particular year.
Okay.
It also gives a scope to the government to follow a counter-cyclical policy in terms of the fiscal support to be provided, rather than getting tied up to a fixed 3% limit.
Okay.
There's a purpose.
A couple of factors that you will now also need to consider as we get to that 2026-2027 roadmap. The Finance Commission recommendations, which will have to factor in the kind of devolution that will have to be granted as far as states are concerned. And on the GST liabilities, sir, do you believe that there is any possibility or any chance of being able to advance the payment as far as or extinguishing the GST liabilities to states is concerned?
See, as far as the two factors, I am glad that you brought up that aspect. Yes, from the financial year 26-27 will be the first year when the recommendations of the 16th Finance Commission would be applicable. Obviously, that will be an important factor to decide what kind of a glide path would be possible. But on the issue of a GST compensation, our assessment is that it will take about 12 months to take care of the loans which Government of India has taken to compensate the states for the period when the GST growth rate was fairly low and the 14% was promised to them.
Let me talk about some of the other factors that the Finance Minister spoke of, or some of the policies that the Finance Minister spoke of, which are really work in progress. And let me start by talking to you about the financial sector reforms. Yesterday, the Finance Secretary said that this is not going to be something that's going to be addressed in the next 6 months or even perhaps the next 1 year. Efforts will be made to start the consultation process, but it's not as if we should expect an announcement on this front in the next budget. Can you tell us what the scope will be, what the ambit is as far as this financial sector, overhaul, reform, roadmap is concerned? What is the thrust area? What will be prioritized? What is the thinking at this point in time?
Okay. Look at that in what context Finance Minister made that announcement. She was talking about next generation reforms, and next generation reforms in 4 areas. 1, 3 factors of production: land, labor and capital. And if you notice, for a land sector reform or land as a factor of production, there are very specific ideas are there, specific actions have been identified. There are few elements of labor related services, and then there's a fairly decent chunk on the financial sector. Obviously, when country at the moment is about 335 lakh crore of our GDP size, and we say that over next 20 years, 25 years will become 8 times the size, and every year that kind of a growth is happening. Financial sector has to become a much larger one, and Finance Minister in the interim budget itself has said that we will prepare the financial sector in terms of their capacity, size and their skills. Now, keeping that in mind, what is the vision? Not just the vision, but what is their strategy to reach there? And that will guide the work of the government, that will guide the work of the regulator, that will guide work of the market participants as to which direction the financial sector to serve the real economy. Now, that is a kind of a fundamental work which we propose to initiate now and complete it in foreseeable future.
And I understand that there is no timeline that's been put in place by when you expect to complete this. But you were talking about the financial sector. Let's talk about banks in particular. And the aspect that's been brought to the table several times previously is that we need not just world-class banks, but we also need world-size banks. In that context, what is the thinking? We've seen one spate of consolidation as far as PSBs are concerned, and then nothing. Nothing has moved as far as privatization goes. What do you believe is the future as far as public sector banks are concerned? What is the thinking at this point in time that the government has with regards to PSBs specifically and their need to service a much larger economy?
See, for some of these items, one cannot force the pace. It has to be that whatever has been done in the past, it has to be consolidated, and thereafter the next set of consolidation will have to come in. That conversation continuously happens between the government as government as a policy maker, as well as the government as owner of the public sector banks, as well as with the RBI as the banking sector regulator, and the decisions get taken at appropriate point of time. So we can't set a timeline as to when the next set of consolidation will happen. At the moment, the pace of Indian banks becoming bigger is moving pretty well. And if you look at what is the size of SBI, it is about 20% of our GDP. Their balance sheet size is about 20% of the GDP. Of course, these are the two different ones, but it is a good metric to follow, that what is the largest bank in the country, what is the balance sheet size.
So do you believe that there is a need to look at the possibility of consolidation, or leave things as be and let market forces determine?
See, some of these ideas, what you are asking the question, these are the questions one has to, precisely the kind of a question one has to, will be grappling with those issues
in the financial
the
sector
strategy
reforms.
part. So one is a vision part, like what you enunciated. India should have not just large bank proportional to Indian economy, but with reference to the global economy, we should have a large bank. Now that's a vision. But then what is a strategy to reach there? And what kind of a time frame one may have in mind? Those kind of an issues which this paper is expected to bring out.
Okay, speaking of work in progress, the energy transition roadmap, also something that the finance minister spoke of. And again, specifics are yet to be worked out, but give us an indication of where the thinking is and what the next steps are expected to be on that front.
Okay. Now, that is again, I'll call it as a second piece where there's a continuity from, or there's an anchor for that particular one, was done in the interim budget itself. As part of the strategy for Amrit Kal, Finance Minister talked about that one of the elements of the strategy was ensuring energy at affordability, accessibility and availability. All three elements have to be there. In Indian context, we need to grow. Per capita consumption of energy is low. We can't grow and we can't become a higher income country without increasing our energy consumption. At the same time, we have to become a lot more efficient than what we are. Keeping that in mind, that our purchasing power, which say about $2,007 per capita income versus what it may be, say, in Europe and others, advanced countries, of $50,000 per capita. The solutions for an energy transition for India have to be entirely or quite different than what it can be for an advanced economy. So in that path, that what kind of a transition pathway we adopt, so that there are no constraints to growth. At the same time, the climate action ambition and the need and the responsibility of the country can also be met. Now, we are doing within Department of Economic Affairs along with Asian Development Bank, trying to get that a structured study that where lies the trade-off, what can be a more sustainable one which we can help us keeping our growth rate high, which implies that our energy consumption will grow up. At the same time, we are towards a path of efficient energy users. At the same time, Niti Aayog is doing a lot more comprehensive work. So the idea is that in about 6 months' time or before the next budget, come out with a pathway, that the second policy paper on the energy transition pathway for the country.
So this is likely to be completed within 6 months, of earlier than the financial sector vision and execution roadmap that you spoke of. So this could perhaps find its way into the next budget?
Certainly, that is an idea, that each of these works which will be, which we have done preliminary work and we would be starting it, it does require fair amount of consultation with the stakeholders and coming out. The idea is to keep on informing the policy making. Like this, even this budget has a fairly strong package on what we need to reach to the energy security. There are specific 5 items have been indicated there, but that's not the end of the requirement. The requirement is a lot larger. So as and when, or as we are completing our policy work, or this conceptual work is getting, it keeps on informing the policy. It doesn't mean that it has to become 100% complete, only then it is available, relevant for the policy.
Well, speaking of completion, sir, I want to understand from you where things currently stand as far as the infrastructure pipeline is concerned, a large number there, as well as on the asset monetization side, because, while we have seen some action specifically as far as InvITs and so on and so forth is concerned, what should we realistically now expect on both these fronts, a status check on the infra pipeline as well as asset monetization?
See, when it comes to the asset monetization, as we are aware, few sectors it has done well, wherein the tariff regime is fairly stable and the tariff payers are well known, meaning that public, say that roads, there is a stable toll policy, toll arrangement, toll mechanisms, and it is the only uncertainty there is the traffic. Toll rates are known with certainty. Those kind of assets monetization has been much easier, and that is how we find that number of assets have been now put into the road sector InvIT. The only challenge which we are grappling at that point of time is the valuation aspect, and where the SEBI is doing that work that how to come out with a market-based determination or disclosure or setting that valuation rather than based on a deals which may happen with the anchor investors. Similar manner, when it comes to the power grid or the there again it has been possible to do so. But when it comes to that user is only a single agency, say gas pipelines, there are not many users. So for the pipeline agency to monetize that asset then lease it back doesn't make great sense. So there are areas where the original thought process has worked. There are other areas where more work is needed or a different strategy has to be followed up. So that's on a monetization path. Similar manner, some of the mining sector companies, especially around the coal, have been very successful in monetizing the asset classes, not the mines per se, but the logistics around the mines have been successful in doing that part of a monetization. Other question which you asked about the infrastructure pipeline and what kind of a thrust has to be provided, this budget has a clear direction. The kind of a strong support government had provided for the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidation. So it has to be done. There are
so you're saying
the trinity which has to be taken care. The other two pieces and who else have to do the heavy lifting. Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself. And maybe 2.5 can become 3. What it implies that there should not be any revenue deficit. So that is an implication there. Third piece is around the private sector to come in a much bigger way, which has been possible, which again, there is a mention in the budget that within next 2 to 3 months itself, we expect to come out with a financing framework, which a committee headed by Dr. Vivek Devroy is looking into that. That committee was formed last year to complete their work and come out with a financing framework where the private sector can come in. So Government of India putting its part, state government putting its parts, private sector coming in at a much larger manner. That should be the infrastructure story which we would like to have.
On the infrastructure story, I just want to pick up on the point that you made that the government has done its part and 3.4% is already significantly elevated on account of the fact that the government was really pump priming the economy in a post-COVID period. So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year. That's what we are expected to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.